Or something. Yeah, look, always appreciate getting the chance to speak to our shareholders and appreciate the interest in Invictus. And we're just, as Matt said, weeks out from our maiden well, and something that's very exciting and potentially transformational, not only for the company but for the country and the energy dynamics in Southern Africa as well. So we are recording this, and this will be, Matt, I think you're going to put it up on your channel, so, and we'll put a link to it on our website as well. So if you've got to drop out, then don't despair, and we'll run through some questions after this. And yeah, or happy for anyone to throw questions at me. This is what I'm here for. So you get a chance to ask anything. Nothing's off limits, but I will keep it to what I can disclose from from our obligations under the listing rules. I'm not here to pass on inside information as much as everyone would like it, but yeah, all will be revealed very, very shortly. We've got a couple of very monumental things coming up, and that'll, I think people will be a lot more settled. There have been some delays on some aspects, but we'll run through that in a sec. So I'm just going to briefly touch on a couple of highlights, and I'm not going to run through our entire presentation. That's not what I'm here to do. I've done a lot of webinars that are available on our website, which takes you through a kind of more detailed presentation of not only the company, but also on the technical aspects. So check those out on our website and on the YouTube channels. So this is really designed to just touch on a few highlights, and then the major focus of this is going to be on the Q&A side. So I won't read through the disclaimer. You can do that at your leisure. So looking at Invictus, we've been around since 2018, and it's when I vended the asset into a small ASX listed company and took over as MD and the major shareholder. In that period, we have taken an asset that was left behind by Mobil, who explored here in the early 1990s. They explored over the entire northern part of Zimbabwe, so the mid-Zambezi, which runs from Victoria Falls all the way through to the east in the Cabora Bassa Basin near the Mozambique border. They did a very comprehensive job in their exploration program. They acquired a huge data set, high quality data set, $30 million in today's money, and that included gravity, aeromag, seismic, and geochem. But they thought at the end of their exploration program that the petroleum system was more gas prone as opposed to oil prone. Similar sort of story to the north of us in Kenya and Uganda, where you had companies like BP, Amoco, and Shell exploring in the interior. Again, some of them even drilled some wells. Shell drilled Loporot in Kenya, but ended up relinquishing that acreage in the mid-90s when in another oil price downturn. Subsequently, you had juniors move in there and and pick up those assets in the early 2000s and revisit them and reinterpret that data that was left behind, and that led to companies like Hardman Resources unlocking Uganda, and companies like Africa Oil and Tullow unlocking Kenya, and those have resulted in billions of barrels of oil discovered. So we've been lucky to inherit a similar position in Zimbabwe with fantastic data set, identified prospectivity already, and we took that asset and matured it. So reprocessed Mobil's data, ended up identifying this big Mukuyu prospect, previously named Muzarabani. From that reprocessing of that data set, we were really encouraged, and then went out and shot some additional infill seismic data last year, which revealed some additional prospectivity in Mukuyu, and also this new basin margin play, which we've been maturing. And that really has been transformational, that seismic program. So the independent resource assessment that we put out last month in July, independently done by ERCE, for the Mukuyu prospect alone, 20 trillion cubic feet and 845 million barrels of condensate. So it is one of the largest conventional targets will be drilled globally in 2022. It doesn't matter what year it's drilled in, it would be one of the largest drilled. And it's the largest undrilled prospect onshore Africa. And really it's been hidden away because of the above ground situation in Zimbabwe rather than the below ground potential. I think probably just going back to the mobile days, the other reason that this has been sitting idle is because that mobile exploration, the results of it were never put in the public domain. And so it's all of that information has been in hard copy sitting in the Geological Survey office. And it was only from me sitting in there looking and reading through these reports and seeing the potential, we were really encouraged. And that's where this journey for Invictus started in 2011. So we've got a working petroleum system in the Cabora Bassa Basin. We sampled this at outcrop. We've got source rock, reservoir, seal, and obviously enormous traps that we've been able to identify on seismic. And we are a little while away, a couple of weeks away from spudding this first well. More recently, we brought in a carbon offset project into the company, and that will see us become the first carbon neutral cradle to grave asset in terms of the Cabora Bassa project, but also company from an oil and gas perspective. So something that we've been working on for a long time, and really pleased to have brought it in. Not only does it position us uniquely as an oil and gas company and as a project, but also as a very nice complementary business arm to the company that will also be very, very lucrative, and I'll discuss that shortly. We've got a very, very supportive government in place that are willing success, and if we do discover multiple TCFs or hundreds of millions of barrels of liquids, we've got markets and infrastructure around us to supply those markets and the infrastructure to get it there. And then we've also got a very experienced board and management team, both in Perth, in the UK, and in Zimbabwe, and a track record of discoveries and development of assets. So I'll briefly touch on our team. Stuart Lake, our chairman, industry veteran. He's got a prolific track record in terms of oil and gas, a fantastic success rate in finding oil and gas. Spent 17 years with Shell, spent a lot of time in their African assets, and in fact in places like Kenya where Shell were exploring, and also a long time in onshore Egypt. He then moved to Apache, ran exploration in new ventures there, and then at Hess after that, and made 7 discoveries on the trot in Ghana. After they inherited that acreage, having drilled a dry hole, he worked it up and got them to drill some other prospects and made those consecutive discoveries. Bought those assets back in the 14-15 downturn from Hess with Aker BP, and then made a subsequent discovery in 2019 on that acreage, and then they sold it for multiples after that. So Stuart is very sharp, not only from a G&G perspective and an exploration success rate, but very savvy, in terms of the oil and gas business as well. So fantastic to have him on the team in the trenches. He still gets pretty involved and his hands dirty with with some of the seismic data. He can't really help himself, which is great. Joe Matizwa, our deputy chairman, he joined the board, the main board last year, and that was off the back of Mangwana Capital, who we brought in as a strategic investor into the company, and they did that during COVID and supported us through there, putting money in at a 90% premium with their first investment, and they've even with a 90% premium, they've done very, very handsomely out of that. I think they put their money in at 1.8 cents. So they're very, very happy shareholders. And Joe, we brought onto the main board, having gotten to know Mangwana, and Joe helped us out a lot, particularly during COVID when we couldn't travel, and business in Zimbabwe is done face-to-face there. Having someone of the caliber of Joe on our board, who's one of the most respected businessmen in Zimbabwe is a fantastic coup for us. He ran Delta Corporation, the largest listed company in Zimbabwe. They're a beverage manufacturer, and so he's a heavyweight in business there. Until recently, he sat on the, on the Reserve Bank of Zimbabwe board, and is currently on the Infrastructure Development Bank of Zimbabwe board as well. He also sits on the Presidential Advisory Council. So that was an independent body put together by the president to advise him on the economy. So Joe has fantastic relationships in government. He's very respected, and he gets a huge amount done for us. So very, very pleased to have him. My background, I'm a reservoir engineer. I have, from people who don't know me and my story, I am from Zimbabwe originally. My family is still there and in Zimbabwe. We've been in business there since 1897. It's one of the oldest companies in the country. So do know our way around Zimbabwe from a jurisdiction point of view, and doing business. And really, this is how this opportunity came around. But I've spent the last 20 years in Australia, and 15 of that in industry in oil and gas here. After getting a start in coal bed methane in Botswana, joined Woodside, and largest listed independent company in Australia, independent oil and gas company. Worked through all of their assets from exploration, production, appraisal and development, and then in the latter part of my time there in the Global New Ventures team as business advisor when Woodside were making their exploration push back into Africa. And then more recently at AWE, working on Whitesea, which is the largest onshore gas discovery in Australia in the last 40 years. So led the reserves work, developed the production profiles, and also the commercial work as well. I'm one of those people who likes to understand where the commercial drivers are and how to maximize the value of assets, to make sure that you wring as much as you can out of them. Gab Chiappini, very experienced on the corporate side of the business, and is involved in a lot of companies. And then Barry Meikle, our country manager, who took over from Brent Barber earlier this year. Fantastic industry experience with Total and Entoil in PNG, and also with Tullow and Africa Oil in Kenya. And so he's fantastic to have on the ground there. He's getting a huge amount done, and has taken a lot of weight off my shoulders from our activity and managing things on the ground in Zimbabwe. So looking at where we are in terms of location, Zimbabwe has been off the oil and gas map for most of the last 20 years after Mobil left. And really that's because of the above ground challenges in Zimbabwe as opposed to the below ground potential. And as I mentioned, the other contributing factor to that was that Mobil data had never been put out in the public domain. No one had ever seen any of the seismic data or understood any of the potential and seen the size of these structures and traps that are sitting in the Cabora Bassa Basin and the Mukuyu prospect. So we are surrounded by a lot of notable players, including super majors, very large independents, but probably two of the more relevant peer companies here are Renogen in South Africa. So they are a biogenic methane project, relatively small, sort of 200 BCF, but now valued. So they're in the pilot development phase at the moment. They are now valued at roughly $1 billion. The Central Energy Fund, which is a subsidiary of the South African Energy Ministry, put in $100 million for a 10% stake into Renogen. And that's really because of the gas demand in South Africa and the premium pricing and the strategic nature of gas in South Africa. And then Recon Africa here in onshore Namibia, and they are further west in this southern Trans-African rift system through here, also known as the Zambezi rift system that travels now travels west to east, but when these basins were originally deposited, the Zambezi actually used to flow east to west. So Recon have been following a relatively similar program to us. They, sorry, and I'll just mention one other thing. The other reason that Mobil relinquished this acreage is we had some onshore discoveries in Mozambique, multi-TCF discoveries that were made in the late 50s, late 50s, early 60s, and still hadn't been monetized at that point. So Mobil saw very little point in trying to discover more gas. So back to the Recon comparison, they took a somewhat unorthodox approach to their exploration program, where to go out and try and prove those petroleum system elements being present in the basin, they had to go and drill some stratigraphic wells. So we've been very fortunate in that to the west of our license area, we're at outcrops. We've got all of those elements that come up to surface, so source rock, reservoir, and seal, that we're able to sample at surface, and with that existing mobile seismic data, track it back into the basin. Whereas Recon, because there's no outcrop, they had to go and drill it to figure out if it was there. So we've had a great head start in that respect. We've got a very, very mature data set now following our infill seismic campaign that we shot last year. We've got a big data set now, 1,450 line kilometers of very high resolution 2D seismic. We've got conventional prospects identified. The two that people know about so far are in that original license area, Mukuyu and Masasa. Recon came out with an independent prospective resource estimate a couple of months ago by NSAI, and that has identified 35 leads. So leads are less mature than prospects, and primarily being that they've only been mapped on one single line. If you have a look at the seismic grid that Recon currently have, they're sort of single lines spattered across the license area. We've got a very, very dense and tight grid with very, very fine spacing that covers the entire structure, not just on one single line. So our total prospective resource base between Mukuyu and Masasa is 4.5 billion barrels of oil equivalent, and Recon's across 35 leads is 1.2 billion barrels of oil equivalent. Our resource estimate also excludes that new basin margin play in this expanded area as well, so there's more to come. And then looking at the largest prospects and leads, or targets we should call them, lead 22A, which is the Makandiwa H2 well that Recon are drilling at the moment, is 198 million barrels, and Mukuyu, which we'll be drilling shortly, is 20 TCF and 845 million barrels. So, from a size of the prize for the cost of entry, obviously we're drilling something from that is multiples of what Recon are chasing. So in spite of all that, I think we have been suffering from this Zimbabwe discount factor because of the perception that people have about investing in Zimbabwe. But that has begun to change a little bit with some goals that we've kicked, and we've got a few more coming up, but also looking at other companies who've been transacting successfully in Zimbabwe. Prospect Resources, a lithium company, they carried out their exploration program. They drilled out their resource and built a pilot plant, and then had bids come in from 7 parties for that, and successfully exited Zimbabwe. And I think a good sign always is that Prospect have retained some of that capital and have chosen to invest it back in Zimbabwe as well, and continue exploration in new assets there. So we're seeing these signs now that things are turning in Zimbabwe. So looking at Recon's journey, and we've had a similar journey through this build up to the drilling campaign. Often in these early stages, it is quite dull from a market perspective, because you're doing a lot of technical work that takes a long time to mature, is necessary, but is not particularly sexy in the market size. So, when you're doing all this technical work, it does take a long time to mature. And it's only really when you get into these, high impact activities, sometimes shooting seismic, if again, there's no guarantees when you shoot seismic that you're going to turn something up, but that's then worthwhile drilling. Obviously, we don't have that problem, but the real action really starts in this drilling phase. So Recon got from a market cap of roughly $100 million or so up to $600 million pre-results. So they released some updates here. I think this was some shows that they had, and then confirmed that a working petroleum system existed in the basin, and that saw their market cap shoot up to above $1.25 billion following their first well, and then on the second well, with similar results up to $2.3 billion. So that was just not off an actual discovery, but a working petroleum system. So if you take that, we're drilling an actual prospect and target. If any one of those horizons come in, then we have a very, very commercial discovery on our hands, and we'll be trading at multiples of where we are today. So in terms of the risk reward balance, now we've got an enormous prize, 4.3 billion barrels of oil equivalent, and if any one of these horizons come in, we're off to the races. So looking now at what the drilling program entails, we've got Mukuyu 1, which is in our original 100,000 hectare license area. And we did a transaction with the Sovereign Wealth Fund earlier this year to expand that. And this will include this is the sort of core of the license area through here. This is all outcrop, where we sampled the reservoir source and seal where it comes up to the surface. And so our seismic campaign, and there's an image, we won't have time to go into that today, but the core of the seismic area that we focus is basically through here where the play fairway is. So we'll be drilling Mukuyu 1 first, and then we'll drill basin margin well following that. So this is a very simple schematic of the Mukuyu 1 well, just to illustrate the targets for each of these horizons, and what the size of the prize is at each sort of level. So at this top 200 target that we've recently uncovered from the seismic survey that we shot last year, 2 TCF and 77 million barrels of condensate, very material just on its own. It's something that we really like and we're really excited about, and really pleased to have uncovered in this new data. We always thought that there was a good chance that little sliver that we identified would get bigger, but we were completely blown away when we started doing the mapping. So really excited about this first up target, and relatively shallow at 850 meters. Presents a couple of challenges from the drilling aspect, but I won't get into that at the moment. But we've got a diverter on site in case we take a bigger kick than expected, and we can safely deal with it. And then all through here, we've got materiality all the way through to our primary target in the 600 and 650 in the upper Angua alternations member. So if any one of these horizons come in, we're off to the races. And having 7 stacked targets to drill through, and then being material at every horizon, means that we've got a fantastic chance of finding a commercial discovery in this basin. So probably the easiest way to talk about chance of success is if you take a dice, and if you're trying to throw a 6, if you've got 1 chance at it to roll a 6, you've got a 1 in 6 chance. But if you've got 7 chances to roll a 6, your odds are pretty good of finding at least one zone of interest out of these 7. So having stacked prospectivity in these frontier basins is crucial, and why we really like this basin from a prospectivity point of view. Baker Hughes have got the integrated well services contract, so they'll be handling everything from the services side. And Exalo have set up on site. We raised the mast on Monday, I think, and jacked up the drilling platform. So that's in its sort of final stages of preparation from a rig point of view, and now the guys are assembling all the bits and pieces around the rig now that the mast has been raised. So we're not far away, and this will be, the first well off the bat is the largest undrilled prospect in onshore Africa. So very, very exciting. I'm not going to dwell on this slide because we've got an announcement out of that, and I've chatted through this before, but these are the independent numbers that have come out with from ERCE. 20 TCF, 845 million barrels of condensate, absolutely enormous prize. And on the high side, and probably one thing I will touch on the ERC estimates is that they've constrained that, and if you go back to our announcement that we put out with when we put out on the 5th of July with this upgrade, ERCE have if you look at the structural closure of these targets versus the area that ERCE have confined even the P10, the high case to, this thing can get a lot bigger as well, very, very quickly. So we've got higher internal numbers, but obviously, we've never put out our internal numbers. I think for junior companies, having independent numbers always gives people, because you can swing these. Because it's such a big structure, you can swing this enormously on the upside. So these are very, very rational numbers, even though they're very, very big from ERCE. Moving on to the carbon offset project, and I think this went a little bit over people's heads when we put the announcement out, and I was pretty sure it was going to. I'll be doing a more detailed webinar on the upcoming project, including the basin margin prospectivity once that's completed, and I'll also run through the carbon offset project in a little more detail. But essentially, whether you like it or not, the environment for oil and gas companies has changed, and whether you agree with it or not, this carbon neutrality is becoming central to investment theses for large institutions and even for individual investors. And so it's going to get to a point where this is a prerequisite for you to have a carbon neutral or a net zero plan as a company. And in fact, in Western Australia now, for new licensing rounds, before you even make an application, or as part of your application for new acreage, you have to have a carbon offset plan that goes along with it, even though you have no idea. So if you're looking at a block that doesn't have any data, you have no idea how big an offset pool you're going to require. That's something now that the government is requiring you to have before you even go and bid for acreage. So this is where things are getting to. So, we took the position that we can either be victims of this, and then you've got to go out and try and source these credits yourself and buy them on the market, or you can be proactive and put it in place, and that's what we sought to do. So originally there's another I'll talk about RED projects first. So RED projects, reducing environmental degradation and deforestation, is a UN framework that was brought in, and really that was to protect existing forests from being deforested or degraded. And the reason being is that existing forests absorb more CO2 out of the atmosphere than planting new trees. So new trees take a long time to mature and establish themselves before they start to process meaningful volumes of carbon dioxide. So by protecting existing forests, that's better in the short term for carbon dioxide absorption in these big carbon sinks. So they developed a framework that provided a means of incentivizing people to look after existing forests. And so that's how, by putting in these programs to prevent deforestation, you are then, and that's based on the biomass that is in those areas, that then determines the number of carbon credits that would be generated, which is equivalent to the amount of CO2 that would be absorbed by your project over that period. So that's how these programs work, by incentivizing local communities to not cut down forests, whether that's for firewood, for cooking, or for making charcoal and selling, or for forestry, for agriculture, I beg your pardon, for planting. So you put in a range of these projects to prevent that, and that's what generates the credits. So we've actually got one of these projects that comes into our license area, Cabora Red. It's one of the largest red projects in the world, 700,000 odd hectares. And we actually had to consult with Cabora Red when we were doing our environmental impact assessment, and that's where we kind of got the idea from having a carbon neutral project cradle to grave. And we really liked the tie-up with Cabora Red because it came into our license area. We were already dealing with the local community on that front and putting in our own CSR programs. And it was a very, very kind of complementary relationship. We wanted to get an option on a big bank of credits so that if we were successful, that we could offset our project and be carbon neutral from cradle to grave. So initially those discussions went well, and then the carbon offset market really took off in 2020. And they said to us, you can't pay us enough money to lock up 15 million credits because of the sort of pricing that we're getting at the moment. So that fell away, and we were disappointed. But very fortunately, at the beginning of this year, a tender came up run by the Forestry Commission, who are a state-owned entity for these red projects. There were a few of them, and we applied for Ngamagwa and Sukumi, and we were fortunate enough to be awarded these projects. So very pleased on that front. We've been conservative in the number of carbon credits that we think it's going to generate. Cabora Red, for example, which is just over double our project area, will generate 196 million credits over its 30-year life, and we've estimated 30. It'll probably be a lot more than that, but it's still subject to independent verification. So this will provide us with a means of generating our own credits internally, which means we're not having to go out on the market and buy them in the future, and also provide us with excess credits that we'll be able to sell in the voluntary market. So at the moment, they are trading at anywhere between $10 and $20. But with the demand coming up from the future, because of all of these net zero commitments that companies are making, they're going to have to start going onto the voluntary market and purchasing credits, which is going to drive the price. And this is where you see these price forecasts coming in. So not only will it save us money from not having to go and purchase credits, but we'll be able to generate a lot more revenue, and a significant amount of revenue based on this forward pricing outlook. So we think it's a really fantastic complementary arm to our business. It's a homegrown solution for our project. We're not offshoring it somewhere else. E&I Total, they've got some of these projects in Zambia and Congo and other places that they're developing for their emissions that go on in other parts of the world. So we really like this. It's a really nice integrated solution, and something that we think is a great arm to the business as well. So 30 million credits at $100, that's a big bank of credits of $3 billion worth, potentially that we're looking at in the future. I won't labor through what we've been through in the past, just highlights of what's coming up. So title to this expanded area, an updated prospect and lead inventory, and we'll reveal details of our second well, the production sharing agreement, and then commencing our high impact basin drilling opening campaign. We're going to have results from Mukuyu all the way through, because we've got those 7 stacked targets, and we'll be logging those whole sections and providing results as they come through. Then the rig move to the second well, and then that will be the towards the back end of the year that we'll have results from that second well. I'm just going to touch on the government side of things, and then I'm going to stop, and we can go into some of the questions that people have put in, because the rest of it is more the technical side, and I'll be doing an updated technical briefing with the basin margin play once that comes through, and then also I did a detailed technical webinar on the Mukuyu prospect, and you can go and have a look at that on our website. But for people who are unfamiliar with Zimbabwe, it has been a very difficult place to do business, particularly in the latter half of the Mugabe era, from the sort of, mid-90s and until the late 2010s. So when the new government came into power in late 2017, they recognized that they needed to amend the environment to bring in foreign investment back. So you now have 100% foreign ownership of assets. You've got a guarantee of investor rights, 100% remittance of earnings. They've brought in special economic zone legislation, which provides a range of fiscal and non-fiscal incentives. So 5-year tax holidays, 15% corporate tax rates thereafter, and zero capital gains tax on disposals. Customs and duty exemption, we already enjoy that with our project. So, sometimes in other places you're getting lumped with a, duty of 10, 15, 20% sometimes, and then VAT on top of that. So having that taken off your project up front, particularly in an exploration phase, is a great cost saving straight off the bat. And then finally, offshore banking, which essentially treats you as an independent entity within the country. So you're completely insulated from the local financial system. You don't have any of the currency effects that people will be familiar with, and hyperinflation and dealing in local currency. So that we're completely insulated from all of that as under a special economic zone. And we've got that provision through the Petroleum Exploration, Development and Production Agreement that we signed last year. And that also provides us with a 25-year production license, and then renewable for a further 25, and 25 after that if you're lucky. Wangi Collieries had that, they operate under a special grant, and that's been in operation since 1904. So these special grants are renewable for 25 years in a production sense. And then finally, from a fiscal point of view, the Petroleum Production Sharing Agreement, which will provide a stable and transparent legal and fiscal framework. So that sits on top of the existing, so we've got existing legislation through the PEDPO, which will take us through to production. The Production Sharing Agreement, we have volunteered and put on top to government to provide them with a more reflective overall what's called take. So government take is your royalties, taxes, and sometimes with regimes you've either got production sharing, or you've got an additional profits tax, as well as any equity. So all in all, bringing Zimbabwe up to the regional standard, so that the country receives a fair share of their resources. So that the amendments to the petroleum bill were put into the midterm budget update on the 28th of July. Parliament sits back on the 16th of August to pass that bill, and once that is completed, we'll be able to sign the Petroleum Production Sharing Agreement. So I'm just going to stop there, because the rest of the presentation I've been through from a markets perspective and the technical aspects of the project, but I'm just going to sort of skip through to this summary slide and just recap, and then we can go on to some questions. So we have secured first mover advantage in Zimbabwe because of our unique DNA as a company. So with my history there, our strong roots in Zimbabwe, being able to recognize the opportunity early, but also having a fantastic team in place that has seen us progress this asset far quicker than most companies could, and understanding how to do business there has been key. We've had validation from multiple potential partners who, we opened up the process to bring in partners, and that has really provided that endorsement from an above ground perspective, which has been as important as the below ground potential, and that being recognized by multiple parties. From a location point of view, although we're landlocked in Zimbabwe, strategically we sit in a very, very important position within the region. We've got the greatest market access in terms of the electricity grid through the Southern Africa Power Pool, and also we've got the closest time distance to the major gas infrastructure that feeds into the big South African market as well. And being onshore with the easements we've got locked up through our rights in the Petroleum Production Sharing Agreement, we're going to be able to monetize that very, very rapidly in the event of success. And we're closer to the major markets in South Africa than even the deep offshore discoveries off of Mossel Bay. The government's very supportive of us and have been very helpful and willing success. This project is potentially a silver bullet for the economy, and so the government have been very supportive in making sure that we get everything that we need. Our board and our team is highly aligned to the company. All of the board now sits in the top 10 shareholders, and so we do look after the capital structure. We make sure that we spend our money very, very frugally, and that it all goes towards a project and improving the value of the company. We're a low-cost onshore exploration play, but we've got proximity to those major markets in Southern Africa that are premium priced. We've built in the rights to that infrastructure to access it as well. The seismic campaign that we sole risked last year, and at the time, we decided to do that because we knew it would be a huge value add because of what we'd seen with the mobile data, and that it has exceeded our expectations and what it's uncovered. And we're very, very happy with where the portfolio sits, and our excitement has grown leading into this drilling campaign based on what we've seen from the seismic results. I think, even though with all of these aspects combined, we still have been suffering from this Zimbabwe discount factor, and that may persist to some extent, but I think that will all be alleviated on success. If we have success with the drill bit, the risk element of that I think will be overlooked because we'll have a few other things in place as well. So we still suffer from a discount in terms of our valuation if you look at our peers, like Recon, like Renogen, but hopefully that'll all change through this upcoming drilling program. So I'm very excited to be starting that very, very shortly. Okay, I'll throw over to Matt and Mark now for some questions.
Awesome. Thank you, Scott. Well, I think I'm going to start almost where you ended, and I'm sure this is something that you get all the time because of the jurisdiction that you're in. And so, I know you touched on this, but I think that a lot of people here will have the same questions I do, or surrounding the Zimbabwe discount, right? If you want investors, not traders, right? If you want sticky money to enter your stock, you have to allay concerns surrounding jurisdictional risk, right? So rewriting legislation, rewriting contracts, or all those things are good that you see. You talk about Zimbabwe turning over a new leaf because people don't know Zimbabwe, right? I mean, if people in the West know Zimbabwe, it's Mugabe or it's hyperinflation, right? We don't know the intricacies. We don't know the kind of on the ground realities. I guess, could you just kind of give your perspective on the ground? I mean, do you have examples? I mean, other things you could talk about, but I mean, do you have examples of exploration or development companies that have moved towards production and not had the rug pulled out from underneath them? Or I guess, can you just speak more specifically in terms of evidence that things are different, right?
Sure. So I think there's a couple of things, and probably the two mainstays of the economy there are agriculture and mining. So on the agricultural side, people will have memories of the farm invasions that took place and farmland being confiscated, and that really gave Zimbabwe that label of being an unsafe destination for investment, because if there's no respect of title, that's a fundamental issue when it comes to business. So I think the government took a very, very important step a couple of years ago where they recognized that, and they have now put in place a plan to compensate those former farmers for their land and the improvements that they made to the land. Whereas under the Mugabe regime, it was just, that was it. They've taken it, and that's too bad. So we've seen a change now on the agricultural side of investment. So before that happened, what you had was a lot of farmers investing in cash crops that are just season to season. So Zimbabwe's been a very big tobacco grower. They were the third largest tobacco growers in the world at one stage. Very, very high quality. The fertility of the soil there is incredible. You can, just throw something on the ground, it'll grow. You don't have to do much. And so people were planting tobacco and maize, which are seasonal crops, and they're basically going from season to season, hedging their bets to have a look and see how things were going to unfold. But now what we've seen in the last couple of years is long-term investments in agriculture. So farmers have moved back, and when after that initial period happened, there was a lot of subsistence farming from everyone who, all of these people who just settled on the farms. But we're seeing commercial farming come back now, where farmers are leasing back farms, and we're getting things like center pivots that are going in, big irrigation operations, which require a lot of upfront investment. Not only that, but people investing in long-term crops, blueberries, tobacco, macadamia and avocados. Those take 5 years to mature until you get to your first sort of harvest. So the investment environment has improved from an agricultural perspective, and the service sector in agriculture is absolutely booming there. Zimbabwe also didn't have to import maize for the first time last year, which has freed up a lot of foreign currency for other parts of the industry. So things from the agricultural side have certainly improved, and that's off the back of that land compensation deal. Secondly, on the resources side with mining, again, we've had a long history as a mining jurisdiction. Mining's been going on for over a century in Zimbabwe, and it is well understood as an industry in the country. A few months ago, there was a conference down in South Africa about the Zimbabwe mining industry, and we've got some fairly major platinum miners there. We've got Zimplats, who are listed on the ASX here. We've got, and they're a subsidiary of Implats in South Africa. There's Mimosa, there's Anglo American, and a few others. And Roger Brown, who's the CEO of Implats in South Africa, was asked, similar question: how do you see the investment environment in Zimbabwe and the perception of it? And his answer was, we're glad that Zimbabwe has such a poor perception, because it limits our competition, because it's the most profitable, our most profitable mining venture. You've got amazing human capital in Zimbabwe, because you've got this long history of mining. And so companies like Implats, like Zimplats, like Anglo American are reinvesting into Zimbabwe. And I think that's always a big sign that companies who understand the jurisdiction more so than outsiders who are looking at it inwards are prepared to go back and reinvest. So I think that, from that perspective, that's a good sign. We've also just had Caledonia Mining, a gold miner. They've now gone and bought out Bilboes, the mine next door, in a deal as well. So we are getting that reinvestment coming back in. And I think, if we're successful in our project, it's high profile, everywhere, and that will really open up the doors further for new investment coming in.
Oh, thank you. I guess kind of a follow-up, just in terms of it being in relatively new, new again, right, post-Mugabe sort of market. What is, you compare yourselves to Recon Africa, and if you follow that story, the environmental permitting and kind of the bureaucratic side of things can sometimes be a little bit labored, just because I think they're laying down tracks as the train's moving, right? This is kind of their first time through these processes, right? Is this kind of similar for Zimbabwe, right? I mean, are the environmental, other permitting approvals, are the processes well documented? Are they known, or are you kind of working alongside or waiting for ZimGov to come back to you with these things?
So on the environmental side, that really hasn't been a challenge. I think Recon are having their challenges for different, because of different issues, and perhaps the way that they've gone about their program. And once that genie's let out of the bottle, it's very, very hard to put back in. I think we've been very deliberate from the start on how we've approached our project, involved the local communities, involved all the NGOs right from the start, and everyone's on side and supportive. And our country manager, Brent Barber, our former country manager, was involved in the mobile project back in the early 90s, and so he dealt with that previously, and our local partner as well was also at the Geo Survey when that was going on. So we've known how to approach this, and we've got a lot of history with this project even prior to Invictus. The challenges that we've really faced have come around the kind of petroleum specific aspects, which have been the agreements that we've been trying to sign. And really so Mobil did have a production sharing agreement in place when they were operating in Zimbabwe, but that was when the mines and energy ministries were combined, and that agreement was a single agreement which could be signed off by the minister. We've had a lot of loss out of the bureaucracies from that internal knowledge of government of how petroleum agreements work. And so there's, and this is not just in Zimbabwe, this is anywhere you go. I think if you don't have any knowledge and you're being asked to review and interrogate an agreement which you have no understanding of, it's something that's pretty terrifying for most people, particularly with what's at stake. And so there has been that hesitancy on that part, and a bit of paralysis. And also we've had from the prior Mugabe era, and some of the ministers and permanent secretaries who were in the ministry have actually been prosecuted because they've entered into agreements with other parties that haven't been signed off appropriately, that haven't followed the right procedures. And so that's also resulted in a very kind of labored and cautious approach from those ministries, because they want to do it properly. They don't want to get themselves into any jeopardy from a liability perspective, from a personal perspective. So that's understandable. It's frustrating, obviously, from our point of view, because it has moved very, very slowly. So what the government then did, and so we've had to split the agreements, first of all, so that it's covered by mines, who are a separate ministry, and energy, who are a separate ministry. So that took a little bit of work, and those documents have got to reference each other. So that took a little bit of work to kind of get up to speed, and then we've had those independently reviewed on government's behalf. So government organized 2 independent reviews to provide them with the assurance that the agreements that they were entering into were all above board with industry best practice, and that the government was getting its fair share, because they can't look at that document with any informed view to say, this is a good deal for us. So that has been a challenge. We've done a lot of hand holding. We want them to be comfortable with the agreement that they sign, because again, we don't want to get into a situation down the track where they say, look, we've got to open this up again because this is not a fair deal. So we've been patient, we've been deliberate in that respect, but we're nearing the end of it, and I'll be glad to have that wrapped up, because it has been an endeavor.
Well, I think if you don't mind, I'll continue on. We had a lot of these questions are coming from the audience, or we had a few days of asking people to input questions. A lot came up around the PPSA, right? Petroleum Product Sharing Agreement. A lot of, disconcerted kind of opinions or worries or concerns about delays, right? As you kind of just talked about yourself. Could you just, I have a lot of questions here. I could get more specific, but could you just generally speak to this? Why are there delays? Are you confident? What's your backup plan if the PPSA doesn't come through? Are you still going, and the gazetting isn't working properly? Are you going to move ahead drilling? That's kind of the wheelhouse, or the kind of the content that these people are asking.
Sure. So on the PPSA, what has been holding that up? And again, this goes to making sure that we do things properly. There is a so even though we have the agreement finalized, the government hasn't been able to execute it because there's no enabling legislation that will back this agreement if it's signed. So the PEDPA has been done because it sits under the existing Mines and Minerals Act. But the Petroleum Production Sharing Agreement, the government could sign it, but then it's just a direct agreement with the government. It's not actually backed by any legislation. So this will ensure that this agreement has longevity beyond and applicability beyond the current government, because it is backed by legislation. So the government has wanted to ensure that it signs the agreement, it's backed by legislation, and the minister who's signing the agreement has the authorization to do it. So that requires an amendment to the petroleum bill, and it's a very, so Mobil had this in their and luckily that has just sat there since in the petroleum bill since Mobil did this. And there's a section in it that says the government can enter into petroleum agreements, but there's no definition of what those agreements are. So the amendment is a very, very simple and straightforward amendment to define the types of agreements that government can enter into. So that's the small little amendment that needs to be done. So that was put into the midterm budget update on the 20th of July, and is going back, and Parliament will sit on this coming Monday or 16th Tuesday to pass that bill. So once that's done, that'll pave the way for the agreement to be signed. So, to call, because it requires that parliamentary approval, this was the quickest way to get it done, rather than trying to hear a separate bill for this. So that's the route that the Attorney General advised, and so that's the path that we took.
So if you'll let me allow me just to pursue, worst case scenario, let's say, you're confident it's going to get passed. Maybe there's an amendment, right? It goes to Parliament and they have an amendment that will require a whole new round of debates and voting, right?
Yep.
Do you plan to move ahead with drilling? How does this impact? How does this impact the next 60, 90 days or whatever for Invictus?
Yeah, so from our point of view, it doesn't really impact that. We're comfortable with where it sits. We have the ability to go through, all the way to production with the current agreements that we have. And the benefit of this production sharing agreement is really for government and for the rest of the country to have an additional stake in the project. There are some some things in there that are nice for us to have, but this is all a win-win situation by signing this production sharing agreement. So it'll get signed. It's not going to hold us up from our plans of drilling though.
Excellent. Switching gears here, just Mark, someone had a question about marketing efforts in the United States particularly, right? Kind of trying to get into larger markets there. what are your plans for, before drilling, during drilling, after drilling? Is there a budget allocation? Can you just kind of touch on what internal discussions you've been having about that?
Yeah, sure. So we are doing some marketing in the US at the moment, mainly off the back of the OTC being completed, and also now we're getting into a phase, particularly for US institutional investors. Zimbabwe hasn't really been on the radar at all, and so now with our drilling program coming up, it provides them with that kind of catalyst and exposure that they need to convince to jump in. So yeah, that effort is ongoing. So there've been some late nights and early mornings for me over the last couple of weeks, just given the time zone differences, and we've so that's active at the moment. There's no specific budget for it, but we're doing what's necessary and what we think is targeted and effective.
No, thank you. I think that I'll hand this over to Mark now. Mark.
Okay, thanks, Matt. Scott, so there was a few things that came in about on the technical side, and also looking at some sequencing. And one of the things, Matt was talking about the PPSA, but the part that's really flashing in the headlights is about the Gazette of the additional licensing area. And you'd mentioned before that you won't start drilling until the Gazette is signed off. So what is the timeline for that, and what is the sort of sequencing?
Yeah, so the drilling for the second well, we can't start until that Gazette is done, because we need actual title to the area. So we can't go and drill in an area that we don't have title to. So, and mainly that's from in spite of the agreements and understanding that we might have from government to do it, it's really from an insurance point of view that's a challenge. So operators extra insurance or blowout insurance, which is a contractual requirement for the rig. So, but look, that's getting done in time for that. We're not too concerned, but I'll just probably run through the steps for this extra. And again, this has been a kind of a moving feast because of what we've had to involve various government departments and the Attorney General's office to make sure that this is done properly, and it's not we're not putting ourselves in harm's way in terms of this being opened up for being challenged down the line. So we don't want to get into a situation, like an AVZ or someone who are now having a dispute based on how title came about, how the agreements were signed. So both us and government want this to be done properly, so that there is it's absolutely crystal clear, and not there's no doubt whatsoever, everything's been done properly. So the sequence of this has been to for the exclusive prospecting orders that the Sovereign Wealth Fund have, which surround our license area. The process that those had to go through were the initial gazettal of them, which are for objections. So that allows anyone who is affected by the location of the project to come in and object, and to say, well, I want you to stay away from, and that it's really designed for other parts of the country which are more populated, some of them urban areas, farming land. Where we are, it's very, very sparse in terms of population, just because of its location in the valley. Very, very poor soil there, because it's the sedimentary basin, all the metamorphic stuff that's been shed off is on the backside, and some of the most fertile soil on the planet. So people tend to settle on the other side of the escarpment. And there's no other minerals in our license area, apart from some uranium to the west, but there's no gold, there's no, so it's not affecting anyone else. But nonetheless, you've got to have that 21-day objection, which is a statutory thing under the Mines and Minerals Act. That then goes back to the Mining Affairs Board, who prepare the paperwork, and then it's got to go to the President for sign-off and approval. So our chairman was in Zimbabwe last week, had a meeting with the President, with the ministers, saying, look, we need to get this moving along. When we know you've got to go through your processes, and we don't want to circumvent those, but we can speed up the bureaucrats to make sure that this gets done to meet our timelines, because we do not want to have a rig sitting on standby. So that has provided the necessary instructions to speed this up and get it done. So the next step, so the President signed off on those EPOs. Those EPOs will then get gazetted, which is the formal title award. So that's just published in the Government Gazette, and then there'll be an assignment of that to Geo Associates, our local subsidiary, and then that's it. Okay,
so does that mean that World 1 isn't being held up by the Gazette? You're not going to stop?
No, not at all. That's in our current license area, and that's we've got title to that. That's well and that's all in hand. So that's not holding up anything on that front.
Great. Okay. Some other, we've got a hell of a lot of questions. There's a lot of people really interested in all of this. The Netherlands soil report from 2018 is mentioned a lot throughout your presentations, and just people were asking, is that something that can be made available, or do you think everything relevant has already been published in your releases?
Yeah, so I mean, we've kind of moved on from the Netherlands and soil report in 2018. That was the initial. I think they're probably referring. 2018 would have been the November one, which caused the initial furor, which and that was done off of the paper seismic sections, the ones that I first looked at in the geological survey. I had copies of them made, and then I had that vectorized and digitized, and we worked. So those, if you go back to our first presentations, those are the paper sections that we were working off that still had Mobile's manual interpretation on the, and the geophysicists had scribbled in crayon, and we had to try and find a couple of copies that didn't have all that scribbling. So we were working off a very, very limited kind of information data set from that Netherlands soil report, and we've sort of moved on. But nonetheless, if you look in the notes at the back of that release, and I think it was done, it would have been early November 2018 that was put out. All the relevant bits of information we pull out from that report of how the estimates have been completed, the inputs that have gone into it, and obviously the results. So we kind of strip out the reports. Often, the first 8 pages are talking about the history of the project, which we put out, and then the back is all about the different classifications of resources, reserves, etc., and all the disclaimers. So all the relevant information is out there, and I think from a company point of view, we put out a lot of technical information compared to most. I mean, if you look at our presentations, they're very detailed. There's a lot of technical detail in there, and a lot of the companies like IHS, Woodmac, they always, whenever I chat to them, they say, we love your presentations because we get a lot more information out of you than we do out of most companies. So
very benevolent.
So the most recent one is the ERCE report, which is all the updated, the latest information. That's all the new seismic data, all of the studies that have been integrated. So the most relevant report to go and look at is from the 5th of July when we put out that announcement. So
because your chance of success seemed to be higher than the ERCE one. Was there any reasoning for that? Yeah,
so a couple of reasons. One, ERCE use a play and then a prospect chance of success. So they utilize a 7-factor a 7-factor chance of success versus a typical four elements. So what happens is when you multiply 7 fractions together, the numbers get smaller and smaller. So obviously if you multiply 0.75 7 times, it's a much smaller number than multiplying 0.75 4 times. So that's the initial thing. And we had not a disagreement's a strong word, but a different point of view to them, where we said, look, you're double dipping on a play versus prospect elements, because you're saying that reservoir in the play is 0.8, and then again in the prospect it's 0.8. We think it should be, you should take the lowest one out of the play and the prospect and only use that. But again, they're independent, and we put the numbers out at the end of the day. They also don't take into account any seismic attributes out of that out of that chance of success for those particular elements. And so what we did is provide our view, a similar view of where we see that chance of success are using the same factors that ERCE did, and you can see in our tables in that prospective resource report that we end up with similar numbers to ERCE, but then we use sort of boosting factor for particular horizons where we see seismic characteristics that we think indicate a greater chance of success. And those are more in line with what you see typically, and we gave an example of that Westwood Global report of where you see these direct hydrocarbon indicators leading to statistically higher success rates, and even then we're still pretty conservative on what we've utilized. So that's the reason for the difference, and we wanted to, we published. I've seen some companies publish the numbers from the independent resource estimators and then put their own internal chance of success numbers in, which I think is a bit misleading. So
you put both out.
We've put both, and we've put the rationale of why, of why we have a difference of opinion, and the boost, we would have ordinarily, we would have just done it once and come up with one number. But what we did is show people why we think particular horizons have a greater chance of success than others.
So I know you mentioned there's going to be another technical seminar or whatever you're going to go and do. Are you okay just to give a little bit in terms of this first drill, some of the testing and data acquisition that you think you might be planning? Are you going to do logging while drilling? Are you going to be doing any resistivity, fluid sampling? What sort of stuff have you got planned?
Yeah, so we've got a pretty comprehensive data acquisition program. So firstly, from we'll be using LWD, logging while drilling. So the tools that we'll have behind the bit are gamma res, and then also resistivity.
Okay.
And then from a wireline perspective, we've got a pretty comprehensive suite. So that will be, your standard quad combo, so gamma ray, resistivity, density, and neutron. We've got sidewall cores planned as well, so that'll allow us to take some samples from the side of the borehole, and then also fluid sampling. So we've got a sampling probe, fluid analyzer, and then also sample chambers to recover hydrocarbons to surface, because that is the required criteria for a discovery, is actually bringing hydrocarbons to mobile hydrocarbons to surface. So we've got a comprehensive upfront data acquisition for the drilling side of things. If we are successful, we'll then suspend the wells and then come back and test them at a future date. So we're targeting conventional resources here, so doing an old school drill stem test, which you can't do in Australia anymore, but you can do in other parts of the world where it's where the regulations aren't as strict, but we'll end up bringing in we'll probably, the rig 202 is going to stay in Zimbabwe after we're finished. They're pretty bullish on our program and trying to look for a long-term contract. A lot of appraisal drilling following up. So quite often what you do is you bring in a smaller workover rig to do your testing. But to be honest, looking at the economics of that, bringing in a separate workover rig, it doesn't make sense. So but we will need to bring in some additional kit for the testing. So we'll have to build a bigger flare pit, and then also bring in test separators and a few other bits and pieces, which we'll need to mobilize. But we're not doing that up front because you've got to have that kit on standby. We're going to have we don't know kind of perforation intervals we're going to need. So you've got to order explosives, you've got to order the perf guns. So there's a bit involved before you can get into the testing side of things. But that'll be fun to design that testing program. It's something that I really enjoyed when I was at AWE when we were testing wides here. That was that was great fun. And hopefully we'll get to do that again. So that will probably be, we'll try and mobilize it obviously as quickly as we can, but that'll probably be in the new year. I would say that would happen. In the meantime, though, we'll be looking, if we are successful, whether it's if hopefully one well, and if it's both wells, then then we've really got got some good problems on our hands. And then looking at an appraisal program. So we've probably got enough gear for a third well to start that straight away. There may be there may be some extra casing or things that we'll need to order, but we've got importantly we've got enough wellheads, because that's really the long lead, the real long lead times for fabrication or wellheads, casing and stuff. We can kind of get our hands and scramble to get from different parts of the world. But yeah, that we'll look at then, what's more impactful from an appraisal point of view, trying to build that contingent resource base there as we move up that maturity. So from prospective, which are undiscovered, to contingent, which are discovered resources, and then trying to make that make that number as big as possible and mature it. So yeah, that's a sort of forward plan. We've got, from hydrocarbons to surface, we may have that taken out of our hands a little bit from this, because we're going into an undrilled basin. We don't understand the pore pressure regime fully. So what the pressure of the formations are as we're drilling. And so we're going in with a relatively conservative mud weight, but given what we're seeing off seismic, we don't have a calibration of what that is possibly. So we might get into a situation where if there is a big column, that the mud weight might be high enough. So that we might take a kick and be flowing gas to surface in any case. So but then that's why we built that second reservoir on the outside of, if you've seen photos of the well pad, we've got a second reservoir now that we've built, so that we can top up the mud and mix it up and avoid any serious well control issues as well.
So in this modern world, everyone's all about now information, getting releases, understanding data. What is your intention? I'm not going to hold you to it, obviously, but what do you think about in terms of news releasing? Are you intending to do, once you start drilling, weekly updates? Will you give an update on when you find something? What do you think about?
Look, weekly updates, no, but we will be updating through any material sections of the well and any material events. So obviously, if we have gas flow to surface, if we take a kick, technically that's a discovery, because you've got hydrocarbons to the surface, and that will be material. I think the other issue with that is, because of our position, and if you look at any of the videos on our website or pictures, we've got that huge, the rift shoulders, which sit 1,000 meters above the valley floor. And so you can see the rig, now that the master's up, you can see the rig from, miles across the valley, and that escarpment road that goes down. So and we've got, there'll be people watching. So if there's if they see any, any flare come up, then
the news will be
I'm pretty sure, unless I'm out there, I think I'm not going to be the first one to know about it. So that'll probably lead to some disclosure that'll be made not by us, but from some keen well watchers out there. But we'll obviously report on anything like that that happens. And then, obviously if we see some material gas shows or oil shows whilst we're drilling, we'll depending on the kind of quantum of it, we'll update the market in that, because obviously that's a good indicator as well. And then obviously if we have any results from our logging, so logging while drilling, you do get some indications, but again, because of the mud weights that we're using and going in, and we're worried about this overpressure that we could be suppressing any gas or oil inflows because of the weight of the mud, and that's going to be, so that could suppress it. So just because we don't see gas shows whilst we're drilling doesn't mean that they're not there. We'll get a better indication once we log the well with wireline tools, and that really is your definitive indicator. So
yeah, sure.
We'll provide results for the respective hole sections once we've logged them.
Okay. So when are you back in Zimbabwe next?
I'll be back for spud. So I'm just waiting to get our final sort of spud date, and then I'll make my way over, and then I'll be there. I've got to see on the timing of that, but we've got a presidential visit out to the rig as well. That's happening in mid-September. I won't give you the exact date, but so we'll have the whole board out for that as well. So whether I stay through to that kind of first section of the well or come back, depends on the timing. So I haven't quite figured that out, but I will be back. For the well, it's something that is a pretty monumental occasion, and something that I've been working hard towards for a long time. So we'll definitely be out for at least part of the drilling. I won't be able to spend all my time out there. We've got other obligations as a company director, and got a lot of other things to do as well. And so, and look, I can't affect what's going on from I'm not going to be getting on the floor and helping the roughnecks out and making up joints. I've spent a lot of time, and it's always great to be around the operations. I've spent a lot of time in the logging shacks, in my previous life, and if we're picking MDT points for sampling, then I probably won't be able to help myself and get involved in that with our petrophysicists, because a lot of that I've done in my past. So I'll spend a bit of time out there and in Zimbabwe, but yeah.
Well, we'll be looking forward to your selfie tweets when you're out on site.
Yeah.
So look, I know we've gone on a fair while, and there was just a couple of other questions I think Matt wanted to go through. If you're okay for another 5 minutes or so.
Yeah, sure. I've got as much.
I think it was just curious about any JV progress. Is that right, Matt?
Sure.
Yeah, you're good, Scott. If we keep going for another few minutes.
Yeah, I've got as much time as you need.
Perfect. No, thank you. Yeah, there's just a couple more questions here. Large categories with lots of, I'm going to try to condense this for the sake of everybody here. Lots of interest, of course, with JV and farming opportunities. I think people recognize that you can't actually tell us these things, but I think they kind of want you just, wink and tap your nose if we're going to be rich tomorrow, right? Is where we're at, right? But could you just maybe discuss, could you speak generally, how advanced are discussions? Are you being selective, or how selective are you? Have you seen an uptick in interest from parties after the release of your upgraded prospective resource? Can you speak generally to JV and farming?
Yeah, sure. So obviously off the back of those independent numbers, there has been a lot more interest. Some of the parties that we talked to when we first started to do our internal numbers, before we got any numbers back from ERCE, our geophysicist John was looking at them, and he's like, these are uncomfortable, like how big these numbers are, and so even though we were using the same inputs that we had from the GTEC report that we did in 2019, and the same same numbers that the same inputs that NSAI used for the following vintage after we reprocessed the middle reports. So we did 2 versions. We did when we were presenting them to potential JV partners. We did the version that were unaltered with the same inputs and the wound back kind of input versions. And one of them we were chatting to, they said, look, we understand the numbers and we're happy with your input ranges. And we had a similar problem when we were presenting this to presenting a prospect that had an onshore Oman to other potential partners. And their internal numbers were 90 TCF, and they wound it back to 30. And they said at the end of the day, this thing ended up being 90 TCF after they drilled it out. So the numbers are what the numbers are. Don't try to shy away from it. It is big. It's a big target, and so that's just what it is. So that was good to see from partners who kind of understand the scale of this thing. But nonetheless, I think still having independent numbers that come out puts people's minds at ease, because again, internal management teams, when you're presenting these opportunities to them and they come across and say, well, look, these are the operator's numbers, and they're like, yeah, of course, 20 TCF, you guys, it's big, but having independent numbers, I think puts people's minds at ease, because they know it's been through a rigorous process. You're not going to get away with optimistic assumptions, and that it is an independent view. So yeah, we have had additional interest with all of them, though. We've got to, because we have always marketed this as this wider play with the basin margin included, and because companies don't just want to participate, although this is big, Mukuyu, they don't just want to participate in the one well. They want to be able to capture that upside that comes with proving a working petroleum system and a basin that then unlocks the running room for the rest of the basin. So as we've seen in the Perth Basin here with Waitsia, that was the first discovery in that play, in the King Ear play in the Permian. And subsequently that has opened up now, and you've had 4 further discoveries on the trot out of that play. So Waitsia was the first one. After that, it was West Erregulla, O'Hara Springs Deep, South Erregulla, and now Lockyer Deep. So you don't want to do all of this hard work and then, particularly we've done the heavy lifting going into a frontier basin, drilling the first well, proving that the system works, and then you've left all the upside for someone just to come and put an application in next to you and not have to go through that same agony and uncertainty and all of that. So capturing this wide area has always been key, and we've always advertised to our partners that this is the plan, and they've always wanted that. So we have got a couple of CPs that need to be fulfilled for any farming partners, and that is this wider acreage area, and then also the gazettal of the petroleum production sharing agreement. So that is for a number of reasons. Although we've got a good relationship with government, the agreement's been finalized. Again, because of this Zimbabwe history and perception, foreign companies aren't as comfortable without it in place, and so they're sitting on the sidelines waiting until it's done. So we're racing to get all of that done. But having said that, we've always said that we'll take the best, what we believe is the most value add for our shareholders. So whether that's through a partner or whether that's through sole risking, and there are reasons that you do that, take those routes. I think Recon on the sole risk option have shown that you can go in, you can drill these things by yourself because you're onshore. The cost is relatively low, and you can provide tremendous uplift for your shareholders in the event of success. And I think for our shareholders, they're not in this for they're in this whether at 80% or 50% or whatever the case is. And so we kind of shown that way. And I think originally when we started this process, we were a $10 or $15 million company trying to fund a $25 million work program, US, and we were a $10 or $15 million Australian company. So the most logical route for us was a farm out, because we couldn't possibly raise that kind of money. We dilute our shareholders to smithereens, and just from a feasibility point of view, I don't think we could have possibly raised that amount of money to get it done. So the farm-in route was always the most likely option. I think what we've proven, though, over the last period is when we've controlled our own destiny and driven this ourselves, we've done it a lot quicker. We've been more successful and created a lot of value. I think that was proven out of our seismic campaign. So initially, where I was a little bit closed off to it, because and also I think from a perspective that to prove that this was a good opportunity, we needed to bring a partner in. We've had that validation now through these offers that we've had, which proves that it is something desirable. But there are a few, not anything technical. It's a couple of above ground things that need to be sorted out that's preventing the finalization of this. So I think we've achieved those objectives through that, just purely from that aspect. From a partnership perspective, though, besides the money aspect, some of them do bring other things to the table. Some of them are regional independents who have either developed projects or are potentially big anchor customers of product. And so there's a reason that you'd have to look through what the value of any farm-in deal is on paper versus what the potential long-term strategic value of a partner is. But that's also a possibility post-drilling, and then you're looking at a much different kind of deal, post-discovery as you are pre-discovery. So yeah, we're still on that two-track path. We're racing to get everything in place so that we can execute either way.
Thank you for that. I guess follow-up question, I'll try to articulate this, and maybe it ends up being almost rhetorical or philosophical on your part, but when you're talking about farming and JVs, there's always a balance between maximizing return and maximizing speed, right, of that return. I guess, and without this becoming insider information that you can't speak to, but I mean, what is Mukuyu discovery enough for you that you would go to the table then, or are you going to what position? When is it enough for a position of strength for you to go start negotiating? Is it Mukuyu? Is it 2 wells, 3 wells?
Look, either of them, I think, will be in a, if either of them come in, we'll be in a very good position, just because of the running room that's unlocked in the rest of the acreage. So, and again, it's been hard to kind of talk about it without being able to show you the treasure map of what's in the rest of the license area. So that's where that, and we saw that with with Uganda, with Hardman. Tullow they drilled those first 2 wells and they'd flow tested them, and Tullow immediately bought them out because of then what followed with the rest of the running room. Before this, Hardman was sold for a fabulous price, but before it got up ahead of steam, and they made more discoveries after that, because your success rates, once the basin's unlocked, go through the roof. So we've seen, I mentioned the Perth Basin, that's been 100% success rate from Waitsia. In Guyana, we've seen with Exxon, in following the Liza discovery in their Stabroek block, I think they have now made 20 discoveries in that block, and they've had maybe 3 or 4 that haven't come in. But again, they've been trying to extend the plane, test it, and really go out there. So the running room, once you're successful, is really phenomenal. So the success rate in Uganda went to 85% once they, after Imputa the first well. And then in Kenya, similar thing with the Lokacha Basin, where Ngamia 1 was the play opener there, and then you subsequently had 7 or 8 discoveries through there, and so just a discovery at either of these wells unlocks a huge amount of running room. So but do you want to go and talk to partners then when you've got all of this running room ahead of you, or try and get a little bit more on the table? It's a strategic thing, and sometimes again some of it comes down to monetization, particularly with gas. So the real advantage that we have is being onshore. So if we do discover, we do make a discovery, obviously we're going to re-rate at multiples, but our cost to then go and drill an appraisal well, is another $10 or $15 million. So that, to prove up something that we then have a handle on, we've got calibration of our seismic from the well data, that, then that becomes an attractive option to go and to try and drill that out, grow your resource base, your contingent resource base then, and really maximize and leverage the value of the company. So I think it'll be a watching brief, Matt. We'll make decisions as they come, and then if someone comes in and is prepared to take a lot of risk off the table and makes an attractive offer for the company, which is typically what happens in these kind of scenarios. If you unlock these basins and you've got the footprint of it, it's pretty strategic, and so that's typically when people come knocking. So
excellent. I guess this is kind of, it segues nicely, dovetails nicely into the next set of questions, just kind of generally speaking regarding monetization. And of course, upon buyout, in a theoretical level that occurs, that's not your problem, right? Yep. But I guess right now, people.
From a buyer perspective, as a board, we've got to recommend it to our shareholders. That's the first step. So, we've got a vested interest in it, and we'll be making sure that, we're talking a great scenario here, but that it does recognize the intrinsic value of the company and the asset at that point.
Mm-hmm. So let's just again, pursuing hypotheticals here a little bit. Let's say that you decide to stick with it. You're going to go it alone at some point. How many wells do you go after exploration, and then when does that transition to production begin? And I guess maybe as a follow-up to that, could you just discuss the appraisal program in general then too?
Sure. So on that front, I think a lot of companies take a very labored approach to developing stuff. One of the real advantages that we have is that we've got hungry customers sitting waiting for us to discover something. Often with gas in particular, you've got to either wait for the market to develop, as we saw in South Africa and Mozambique, even offshore discoveries here in Perth, in the Carnarvon Basin, the Northwest Shelf. Those discoveries were made in the 60s and 70s and were only developed, in the mid 80s off the back of a domestic project and then an export project, because they had to wait for the market to develop. We're in a luxury position where the market is sitting there waiting, and they're desperate for gas. So in a gas scenario, there are a number of things that we can do. So, and again, we'll look at, and this is Stuart, our chairman, going back to his Apache days, where he was in onshore Egypt and onshore Argentina, and he got an ass kicking if he wasn't hooking in wells and bringing them on production, and for them to pay themselves back in 6 months. So we've got a similar mindset in that we want to get to an early monetization option pretty quickly. And there's a number of ways that we can do that. So in a gas condensate scenario, we can strip the condensate and truck that off to market. And we can get it to buyer, to the port, go anywhere in the world. From a gas point of view, though, we're looking probably at gas to power initially, and you've got off-the-shelf solutions now with gas turbines that you can buy, and they're modular, and so you can bring them and scale them appropriately. So whilst we're building out that infrastructure, pipelines, and getting those bigger volumes to customers like Sable Chemicals, we've got a short-term monetization strategy to bring in some revenue that will pay for an ongoing appraisal program. That's our sort of mindset with this asset, and not to sit. Probably the beauty with onshore as well is that you can scale your developments as you go and as the market builds. Whereas offshore, because you're limited by your footprint of your platform and your facility, retrofitting brownfields offshore facilities is hugely expensive. So typically what companies do is they do a full appraisal program of the entire resource, build an optimized development plan, and then size the facilities appropriately to suit the market for the 10 to 25 year development period. So we'll take a building block approach and build the asset up, and we don't need to go out and prove, get reserves of 4 or 5, TCF before we can start monetizing this. We'll be doing that very early on and build out that full field development, if you like, over the course of that. But the other advantage is we can get a lot of early dynamic reservoir information from a pilot program that will help us optimize our full field development, which is a really nice approach to make sure that you're not drilling out too many wells too early on. You've got the right size facility, the right phasing of your wells through that, through the big part of your development. So yeah, that's the plan. From there, from a longer term for Zimbabwe, for the longer term aspect though, looking at getting gas into the big and hungry South African gas market, and that will be through twinning that pipeline route from Beira to Harare, which already exists, that brings in liquids products to the country at the moment, and then hooking it into the Romco pipeline, which takes gas from Panda to Mane, those onshore fields in Mozambique, down into South Africa. So that's a kind of midterm scenario that we're looking at, and the gas market in South Africa is facing a crisis because of the shortfall now coming out of Panda to Mane that falls off plateau this year. Sasol, who are the operator, have just hiked wholesale gas prices by 96% as of the start of this month, and there's a big outcry there. And so that 96% now takes wholesale gas prices in South Africa to somewhere between 10 and $12 an MCF. So it's we've been running economics on it at like $2.50, and it's still wildly economic. So it is that's the kind of longer term ultimate, because there'll be too much gas for the local Zimbabwean market, and so we're looking at pushing it further afield. So where Mobil saw a problem with big gas, we see a slew of opportunities, and with also the power market in South Africa is very, very hungry. They're facing a shortfall. They've got a lot of blackouts going on at the moment, and so the Southern Africa power pool will allow us to monetize gas by wire. So in advance of building that pipeline leg, hooking up into the Southern Africa power pool and exporting molecules via the Southern Africa power pool, which already happens. So there's cross-border electricity trading that's run out of Harare. Zimbabwe buys power from South Africa at the moment. They sell it to Namibia. Zambia is buying power from South Africa, and that runs through the grid and through Zimbabwe. So it's there's a lot of ways that we can monetize this. So we're really happy with where it sits, and I think probably going back to that's another aspect besides the technical aspect, is the commercialization options that people aren't aware of because they don't understand the local market dynamics, and that's again where we have this advantage.
Sounds developed. Yeah. Exciting. No, I'm getting excited here. I better calm down. I have to be objective. One last question here, and I'll turn it over to the many people that have stuck through for 2 hours here. Obviously, this kind of shows to you the level of interest that we've got here for your play, right? One simple question could have asked off the top. Are you fully funded? 2 wells testing, $26 million US. Are you fully funded for that, or are you going to have to come back to market at some point?
So we're not fully funded for the second well, and obviously, again, I probably fall into the more conservative camp, and we haven't wanted to go out and fund that until we have title. So we don't want to get ourselves, very low chance of it happening. But again, I think we always err on the conservative side when it comes to things like this, and making sure that we're not putting ourselves or the company in any jeopardy from from trying to fund something that we don't have title to yet. So for Mukuyu 1, we're pretty much all the way there from a funding perspective. And then the second well, we as I said, we're still following that 2-track option of either sole risking or partnering. So we'll see where things sit. I think once that acreage is and that title is gazetted, and we have that security of tenure, and we can unveil the treasure map, we'll see where the chips fall, because that'll be one of the important parts that have kind of fallen into place for a number of reasons.
Excellent. No, thank you. So I think at this point we have about 12 minutes here. I think we may as well use the on the hour as our deadline here. So that's it from Mark and myself. Scott, thank you. Really very, very thorough, and we appreciate your time. I think we will open it up here, if you're okay with this, Scott, for another 10, 12 minutes of questions from the audience. So if you have questions, if you want to either raise your hand, if you want to speak them verbally, or just type them into the chat box, so we can get them to Scott here. But we've got a few minutes left here for anybody interested.
Yeah. Just before that, thanks Matt, thanks Mark. That's it's been pretty comprehensive, and thanks for organising this forum. It's a nice format to let shareholders have but again, I'm approachable. If anyone dials the phone, generally I pick up if I'm there, and always happy to speak to shareholders. But getting the chance to do this one-on-one and have questions that I think sometimes people don't think of these questions, and I always find with Q&As it illuminates, if I'm looking at it from an audience point of view, and having a wide audience that asks different questions and are interested in different things always unveils new information or something that you hadn't thought about before. So I think it's a really good format, and thanks for organizing it.
No, then thank you. Yeah, you've been very gracious here with your time.
I can't imagine many more that we left questions after 2 hours of you're really generous, Scott, and you've done really, really well in terms of how your openness and how you manage to engage. Yeah. Because we had people putting questions in for a couple of weeks in advance, so I think you've covered most of those. There's just a couple coming through on the chat. There was something about, have you got any more seismic that's been shot that is only going to be released post gazettal?
Yes, so we haven't really released anything out of the current license area. There's a couple of snippets in our presentations on one line on the basin margin, but that's about it. But we'll run through that, because people haven't seen the strike line that we've shot along the basin margin to the south, which intersects all of those, that string of pearls play, which looks a lot like the Lokacha in Kenya, with the sort of structural aspects of the basin and the trapping mechanism. So I've got a really, really nice slide that I've prepped that kind of runs through that I'll show off, and
there's more to come.
There's more to come. Yeah.
Okay. There was just something asking about transport infrastructure, and is there a lot of development work that's going to need to go on to assist with getting product to market?
So look, from a land transport perspective, we are, although we're landlocked, we're in the valley. It's actually one of the most accessible areas in the interior. So we've got a tarred road all the way to Beira, and in fact, they're extending a new highway that goes to Kanyemba, which is up in where Zimbabwe, Zambia, and Mozambique meet, right up in the north of the country. It is going directly over the prospect. So they're building that at the moment. So I was out there a few weeks ago, and a beautiful new road that's out there. There's a big wide corridor, and so that'll go actually over the prospect. And I think we're about 1.5 k's off of that tarred road. That to go to the well site. So from an evacuation route and mobilizing gear in and out, it's very, very straightforward. Okay. When we were bringing the rig down, had to go very slowly because you've got 1,000 meters elevation difference between the top of the escarpment and the valley floor. So we've had spotters and everything for some of the sharp turns that they have to do, but we've moved like 180 loads or something there without any incident whatsoever, and got a 130-ton crane down there, which was the first thing that went down into the valley with no problems. So that's been so that's fine from that perspective. From an electricity point of view, and the Southern Africa Power Pool, we're about 100 kilometers away from 3 major interconnectors of the SAPP. One of them's in the valley if we go further east towards the Mozambique border, and then two others are on the other side of the escarpment. And so you've got water and the grid, which are the two main things that you need for gas to power for either open cycle or combined cycle power. Okay. And then from a pipeline route, we've built in the rights for the easements and access to the existing pipeline corridors, and also through those SAPP power lines. So you've got these big wide corridors that they've cut for those power lines that are like 50 to 100 meters wide. They're straight, so they're perfect to run pipelines down. So that also negates the need for private landowner compensation, because it's all been done. Your routes are done, your environmental aspects are done. So we've also loaded those into our production sharing agreement and learned the lessons from places like Kenya and Uganda, who've had their projects delayed because of things like pipeline routes, right, and everything else. And you see in the fights about the East Africa crude oil pipeline and the route it's going to take and everything else. So we've got a lot of that solved just because of the corridor routes that we have, and building them into our agreements.
Okay. So these are really, really small questions, but anyway, what have you got as the depth uncertainty to the 200 horizon?
So we top structure I think is 850 in where we're drilling. Yeah. And look, one standard deviation at 850 I think is probably around 30 meters or so. Right. So not huge. And we're looking at potentially 300 or 400 meters in terms of column height. And what we've seen out of that inversion work, if you look in the presentation with those three stacked potential horizons that we've got, which are lighting up in the gas prone window as well. Okay.
And can you give any update on the 35-cent options listings?
Yeah, look, that is something that is in progress, and we're trying to fix at the moment, because there was a little bit of an admin error in what was put in the EGM versus what was in there. So we're working with the lawyers and ASX at the moment to get that sorted out. So there'll be an update on that shortly.
Okay. All right, and then so the only thing holding you back now is just the last bits of maintenance on the rig, I guess, and that's all looking good.
Yeah, so really it's doing all of the inspection work, so NDT, non-destructive testing, so looking at the drill pipe, pressure testing the mud tanks, and because we're using quite heavy mud in the initial hole section, and that's really because of the depth to the relatively shallow depth, the potential column height that we're seeing, and the buoyancy effect of gas means we've got to go in relatively heavy. And so making sure that because generally you're drilling with, so water has an SG of 1.0, specific gravity 1.0. Typically you're going in with like a 8 to 10% margin on top of that. So seawater's 1.02. You're going in with, and that's brine, which is typically what's in your subsurface reservoirs. And you're going in with like 1.08, 1.1 SG mud. We're going in with like 1.5 SG mud for this initial section, so 50% heavier than ordinary, just to be on the safe side. So that we've got to make sure that there's no, because you do get wear and tear on these on these bits of kit. So pressure testing them to make sure that's all okay. Connecting up the various bits and pieces of kit, because once the master's up, you've got to then arrange things around the base of the rig from where that was sitting. So there's a little bit.
A week. So about a week's worth of work?
Yeah, I think what that is, I think we're probably closer to 2 weeks worth of work, I think.
Okay.
And then Baker Hughes have also got to do their prep work for all of their tools, because they've been transported and they've got to come in and be inspected and anything taken care of, because you don't want to have tools that are in the hole that aren't working, because the main purpose that you're drilling is for your data acquisition. And so it's not just to drill a hole, as much as I'm not gonna pick on drillers and drilling engineers, but they all they want to do is drill a hole and then fill it up with cement when they're done. But the main reason that we go in there is for data acquisition, to give us that information from the subsurface so that we can characterize it. So making sure that Baker have done all of their checks and checked all their gear before it goes in the hole as well is important, because once the rig is once you're drilling, you're spending money. So you don't want you don't want any what's called NPT, non-productive time.
Okay, mate. All right. I think that's all I got from me. I'll cut off from there.
Thanks. I think there was one other thing that you mentioned before we started, which was the fizz gas question on the seismic.
Oh yes, that's well done. Good remembering.
So fizz gas or residual gas is basically from your charge perspective. You've had a reservoir and a trap that's been so the gas has been generated, it's migrated up into the reservoir, and then at some point you've had either it's passed through because there's a small leak in the trap, or it's breached and it's leaked off. But it does leave behind a little bit of residual saturation, and that's typically around 5 or 10% of gas saturation. And that is often enough to light up on your seismic. So it will give that visually, it'll give that indication of
DHI,
of having your DHI having some kind of different fluid response compared to the rest of the reservoir and brine. But what we are seeing is the extent of the velocity changes through these horizons and the conformance to structure along with them. In that 200 horizon, for example, the reason that we're having to go in with this heavy mud is because of that dramatic velocity change that we see in there, and that is not enough. That change is far more than like a 5 or 10% residual gas saturation. So seismic's not foolproof. but from the indications that we've seen from a number, and that's where again we see that different reflection and chances of success through some of those other horizons because of some of these indications like that. So there's I think if this is going to work, it's not going to be residual gas in that, just because of the magnitude of that velocity slowdown that we're seeing. And the reason that you have that slowdown in velocity is because of the different densities of the fluids. And as the seismic waves travel through your formation, different rocks are going to travel at different speeds through the different layers of rock. And then if those layers of rock have a different fluid fill, so if it's water, it'll travel at the same speed as the rest of them out of the rest of the structure. But if it's filled with oil, it'll go slightly slower because of the lighter density of oil. But gas, because it's very light, and your pore space is gas filled, it's a much lower velocity that it travels through. And so what we're seeing are these dramatic changes in some of those horizons, but also then that conformance to structure, where we only see that change of velocity coincident with that structural closure and shutting off at the same depth. That's what really gives us that confidence in some of those horizons in particular.
Okay, so what do you how long? Just last thing then, how long do you think till TD on that first well? What's the time for drilling?
Yeah, so we've said 45 to 60 days for Mukuyu 1, and really that'll be driven by our data acquisition program and drilling time. So if we've got to take a lot of fluid samples, that does take time. But again, champagne problems. So and then it's really drilling speed, and because we are in an undrilled basin, we don't have a good handle on what the sort of expected performance is for each of the horizons. So we base it on analogs in basins nearby, similar age rocks, similar depths. But yeah, it's in that sort of 45 to 60 day range.
Beautiful. All right, I'll leave it to you and Matt to close out. Thanks, Scott. You've done a brilliant job.
Thanks, Mark.
Yeah, precisely. And thank you, Mark, for your help with this. I guess, Scott, before I say goodbye, do you have any final remarks? I guess I'll let you kind of have the final floor here.
Sure. So firstly, to yourself and Mark, again, thanks for hosting this. Thanks for moderating all of the questions and putting it all together. Great forum, and happy to do another one in the future. Hopefully, we're talking about some great results, and I can discuss in a little more detail about what everything means. But then, to everyone else, thanks for all your time. It has been a long session, and also to our shareholders for all of their support. This is something that we couldn't have done without them, and very, very grateful, and never thought that we'd be in a position, like we are now. I think, from a personal point of view, I always knew this well would get drilled one day. And it seemed like a long time away, and a long way out for a very long time. And at some parts I actually didn't know if I'd still be involved. Whether we'd have to sell the asset off, or we were just never going to get it granted in our this is in the pre-public days. So it's it's pretty amazing to be here on the verge of the start of this, and have had the support that we've had. Really, really grateful and excited now. It's going to be a pretty momentous occasion, and looking forward to hopefully delivering some transformational success, not only for Invictus, but also for Zimbabwe and for the energy markets in the region. This will make a positive difference. And thanks again, and thanks for your support.
Yeah. No
problem. I think the chat shows just how excited everyone is. Anyway, for listening to you today.
I'll have to go back and have a look.
No, they really appreciate your openness. Thank you.
Yeah. As do we. Yeah, as do I. It was an excellent conversation. Thank you, Scott. Thank you. And we'll obviously, we'll have to do this again. You'll have to just patience here. One more plug here. If you enjoyed this conversation, community investment server on Discord or junior resource investing podcast on YouTube right now. So yeah, Scott, thank you for your time, and hopefully we can talk again soon.
Thanks, Matt. Thanks, Mark. And thanks, everyone. Take care.
Cheers.
Cheers, Scott. Thank you.